good evening. Depending on where you're listening to us from, it's such an honor to have you all again to join us on the October edition of Real Estate Today, the webinar being organized by Obosi LA and Co. I strongly believe that today is going to be a wonderful day, as usual. My name is Olusanjo Stephen Fowley. I'm anchoring today's program, and I believe strongly that let's get to do this together. I need a bit of confirmation from the back end. If you can hear me, I just want to be sure. At least from the back end, can you hear me?
I can hear you clearly. Okay,
great. Thank you very much. Okay, so good. It's good to be here again, and going to be a wonderful time. So before we get into it, let me just quickly run us through a few things that we should expect. Usually, we say that you can be part of this webinar by contributing your quota, making your comments and asking questions. That you can do using the chat box, the question and answer box. You don't have to wait until the program is ended before you ask your question. You may also want to that we bring you up so that you can make some comments. You want to probably speak and lend your voice to the topic that we're going to be discussing today. So please get ready. And let me also use this medium to say, you can tell somebody to mention to somebody else who also is going to mention to somebody else that we are live and the program has just started. And so please call as many as you can so that they can be part of this webinar, because I promise you, I honestly promise you, it's going to be a wonderful time. You don't even want to hear the topic we want to discuss this afternoon. But hey, let me keep that before I'll come back to that shortly. So grab a cup of coffee. For me, it's probably too late to have the second cup of coffee. I've had one, but maybe you can still grab one. So wherever you are, grab a cup of coffee. Let's do this together, and let's see how this is going to take us. So today, we're going to be discussing a topic, and this topic is titled Foreign Exchange Fluctuations and its Impact on Nigerian Property Values. Insight for real estate stakeholders. I take that once again, foreign exchange fluctuations and its impact on Nigerian property values. Insight for real estate stakeholders. I bet you this topic is the right topic, and I'm sure you all know why, because we're talking about foreign exchange fluctuations. And I'm sure a lot of us have it, whether in the real estate sector or probably an investor. Please grab a seat and come and listen. And to do justice to this topic is no other person. I'm going to read her profile, just short profile, briefly, before I bring her on board. I'm sure she's on the background. You're going to see her shortly, and you're going to listen to one of our profound speakers, and a member of our team who we're very proud to bring on board to speak to us on this topic. And like I said earlier on, you can never have it better than you're going to have it this afternoon. Today, Onye Nwabugu will be speaking to us. Nabugu, sorry, permit me, I just have to call the surname and I have to call it, okay? So Onye Nwabugu is a seasoned real estate professional. She's not just a professional, she's an associate partner with Obosi LA and Company. And our focus has always been on data-driven property valuation and market analysis. Onye is known for her strategic insights, particularly on how foreign exchange fluctuation impact Nigerian real estate. So you can see that the right person is speaking to you today. Our expertise is navigating complex valuations and financial modeling has made her a trusted advisor to investors and developers. Onye combines deep industry knowledge with cutting-edge analytics, helping clients make informed decisions in a dynamic market. So this afternoon, ladies and gentlemen, I bring you up to speed immediately with our seasoned speaker today in person of Onye. Onye, the floor is yours. Good afternoon, and it's good to see you.
Good afternoon, Mr. Sonjo. Thanks for having me. And thanks everyone for joining. So without wasting much time, I would love to share my screen. Okay, today's topic, just like Mr. Son just said, is foreign exchange fluctuation and its impact on Nigerian property values, insights for real estate stakeholders. In order to actually appreciate this topic is actually very timely and crucial for everyone that is involved in real estate, be it property developers, investors, real estate practitioners, property owners, because of the dynamic economic situation we find ourselves and the dynamic nature of our currency as well, you know. So to give context to today's topic, let's just quickly talk about what foreign exchange fluctuation actually means. You know, I know that you already, from what the phrase implies, you already have an idea what we're already talking about. It's basically the change in value of from one currency to another, you know, and Nigeria being heavily invested in importation, we can't shy away from a topic like this because of, you know, we're actually invested in most of the things we use in Nigeria today are actually imported. So we can't actually shy away from this topic. So for foreign exchange fluctuation refers to, like I said earlier, refers to the changing in value of the currency in relative to another. And this particularly is important for import-dependent economic like Nigeria, where FX has profound impact on many sectors, including real estate. So moving on, the objectives of today's webinar is basically to explore how fluctuation in foreign exchange rates, specifically the Naira, has directly affected property values in Nigeria. We'll be focusing on key drivers like construction costs, financing costs, and investors' confidence or investment decision. Those are the key drivers we're going to be focusing on for today's discourse. As a real estate data analyst, I always like to look at trends to be able to make informed decision or to gain insight. And this is looking at your screen, you would see a historical trend of Naira against major currencies in the world, which is the USD, the pounds, the euros, and what has been happening from 2014 to 2024. It has actually shown that exchange rate has actually increased significantly. Like the USD has increased from what it was in 2014 at 172 to a dollar to 1,700 Naira to a dollar in a space of 1 decade, in a space of 10 years. And talking about pounds has increased from 200 to 2,040 Naira within a space of 10 years. Euros too has equally, you know, hijacked as well, increased from 180 to 1,746 euros 58 cents, highlighting economic pressure on Nigerian foreign exchange markets. USD being the most common denomination or most common currency that is being traded on worldwide, we want to actually focus our discussion today on USD, and that's why you have the chart on your screen now. You know, and this chart is just showing you what has happened in the past 10 years from 2014 to 2024. And this data is basically highlighting Nigerian exchange rate. It has shown that the Naira has depreciated from 172 Naira to 1,700, and this is actually like the highest it has gone in recent times, and it's still going up, And this is showing, which when you check, it's actually 114.771%, in the space of 10 years. That's what the fluctuation is right now. And the inflation rate has rose from 8% to 32.7%, indicating very gross economic instability. And if you look at the chart, let's just have a look at the chart so we can actually appreciate what is happening. We can actually see how the chart has moved, showing where it was at 172 in 2014 to how it has increased over the years. See how it has increased in the space of 1 year from 2023 to 2024. It has jumped from 900 to current 1,700, and which is actually very massive increase and depreciation to Naira. So in order to appreciate what has happened in the past decade, we have to actually look at the drivers of what has happened globally that has actually affected the Forex fluctuation, as in foreign exchange fluctuation. And one of them has been the 2016 crash of the oil price, and which resulted to recession. And then the 2020 COVID pandemic. And equally in Nigeria, the 2023 and into the present day, the political instability or the economic instability has equally influenced, the foreign exchange fluctuation in Nigeria. So let's move on quickly. So here we're talking about the key economic indicators, and to be able to discuss how Forex or foreign exchange fluctuation has actually influenced or is affecting property value, we need to know the indicators, what has actually caused this inflation or this fluctuation to occur. And one of them is inflation rate. Inflation rate has actually gone up, over the years. It has been over 15% for over a decade, thereby decreasing purchasing power and increasing, foreign exchange volatility. Equally, our foreign reserve has actually depleted. Nigeria being a country that is dependent on oil revenues, we noticed that if you've noticed, the crash in oil price has actually affected our foreign reserves, thereby causing our Naira to weaken the more. And the next pointer is the external debt and foreign borrowing. As long as Nigeria is dependent on foreign borrowing, it increases our foreign exchange risk, as repaying these debts in stronger currency becomes expensive, thereby further weakening the Naira. Then monetary policies, the monetary policies that is set by the Central Bank of Nigeria affects borrowing costs, thereby attracting foreign, yes, it attracts, foreign investors, because yes, foreign investors can actually invest now in treasury bills and bonds and actually make a kill. But you see that the monetary policies is affecting local investors that have to take loan from commercial banks in order to support their businesses. The interest rate has actually, been so high that it's affecting their profit margin, and thereby this cost is eventually passed on to the end users. And the next indicator is oil price. If you notice, globally, oil price has actually dropped, and Nigeria being vested in oil exports is heavily affected, thereby declining. The decline in prices has reduced our foreign reserve while increasing the price, while increasing prices can actually stabilize exchange rate, but the increase in dependence on oil is actually making us to be vulnerable to these price shocks. Then the major key areas that has actually been affected in the property by foreign exchange fluctuation by major key areas that has been affected by the foreign exchange fluctuation is one, construction cost. A large percentage of the building materials we use today is actually imported. And where does that leave us? You know, when we heavily depend on importing these materials, this definitely the cost of construction will go up. And for instance, the price for steel has surged in such a way that from 2019 to current day 2024, it has surged by 35%. And this further puts a strain in property developers' budgets and threaten, property development. If you look, especially in Lagos, you see a lot of abandoned projects. It's not because they don't want to complete these projects, but, cost of construction has gone up, thereby impeding them from, actually finishing this project within the timeline that they've set for this project. And equally, the cost of financing has equally gone up. Because as FX fluctuates, the cost of financing also rises. Property developers who rely on foreign loans face higher debts to service, these loans. And this affects local investors who may struggle with higher borrowing costs, to pay back these loans. Another key aspect or key area that has been affected by this fluctuation is the valuation of property or property values. When FX rate fluctuates widely, investors' confidence in real estate market actually declines. People begin to ask questions, before people make investments in property. Property is capital, capital, you need capital, a whole lot of capital to invest in property. So before people make such investment, they tend to ask questions like, what is my return on investment? Is investing in this economy going to give me the return of investment that I'm looking at, or is it going to affect my my reserves or the monetary benefit or the benefits or their investment rather? They want to ask those questions, those pertinent questions before they invest in property. And thereby, when there is decrease in demand of property, what happens? Automatically, it will lead to, decline in values of property. And when we talk about decline, you might say, yes, the values of property are going up. But yes, the value of property are going up. But what is the commensurate measure with it going up with stronger denominations? If you look at it closely with stronger denominations like the USD, for example, you notice that either it's stagnant or the value is decreasing. That is the truth. That is actually what is happening. People, most times when we do valuations and, the person says, my property has appreciated. If you look at it holistically, the values of your property has actually, taken a nosedive. So let's quickly move on so we don't dwell so much here. So there are direct effects. Now we're looking at direct effects of FX or FX fluctuations on property value. And one of them being imported components. We've spoken about this earlier, that a significant amount of, Nigerian real estate building materials are imported. And this thereby weakens the Naira. and driving up property prices in urban areas like Lagos and Abuja, and worsens affordability issues, promoting developers to use cheaper local materials, which might actually compromise the quality of the finished products at the end of the day. And the next effect is the rising cost of building materials. In the past decade, Nigeria has experienced a dramatic increase in the cost of key imported construction materials due to FX depreciation or foreign exchange depreciation. And this rising costs inflates construction budgets and affect both residential and commercial projects. Developers with tight margin may actually experience delay and halt projects, and which leads to slower housing delivery. So we have a lot of cases in Nigeria or in Lagos right now where you have investors dragging developers by the horn that, oh, we've given you money and yet you've not delivered. The truth is that it's not their fault, because they are dealing with a whole lot at this point in time where FX is on the rise, and which is actually affecting the cost of building materials. So you won't actually blame them. And then let's move on. The reduction in investors' confidence and property valuation. Foreign exchange volatility has actually created an uncertainty for international investors. You see that a lot of international investors, or FDI as I call them, the foreign investors, have actually decreased. There is a decline in foreign investors wanting to invest in Nigerian real estate markets because of the volatility of our currency, of the Naira, and how the Naira has weakened over time. So the next pointer, or the next direct effect, is financing cost and property investments. The rising effects, the rising foreign exchange volatility in Nigeria has increased property development financing costs. Because right now, the interest rate at the last time I checked was about 28%, correct me if I'm wrong. And if investors, or if local investors actually add this cost into the final product or the final delivery, what would that make of it? It will mean that the property would come at a higher cost, thereby causing the investors that want to invest in property to spend more in acquiring this property, or not even having enough purchasing power to actually acquire this property. Then the value erosion due to inflation and FX. Depreciation of Naira has affected material costs, reducing property values in foreign currencies, like I said earlier, and properties appreciating in Naira may actually lose value in dollars, making it harder for local investors to buy USD price property. Consequently, property valued in Naira may decline despite inflation typically increasing them. So despite inflation typically increasing the values of property, the truth is that in real terms, you see that the property value is actually taking a nosedive. So these are key insights of what has happened here. I'm just trying to show you what has happened in major cities, because this topic is meant to actually look at Nigeria. But if we're looking at Nigeria holistically, we won't exhaust this topic today. We might have to take this topic for months. So let's focus on major cities like Lagos, Abuja, and Port Harcourt. So looking at the chart here, you see that in 2014, when Goodluck Jonathan was in power, Banana Island, cost per square meter in Banana Island was 400. Let's just pick out Banana Island from this trend so that we don't dwell so much here. The cost per square meter in Banana Island was 400 Naira per square meter. And what was the foreign exchange as at then? Was 160 naira to $1. In 2018, when President Buhari or ex-President Buhari took over, the value of property, the value of Banana Island appreciated from 400 to 600,000 naira per square meter. And what was the exchange rate as at then? It was 950 naira to $1. Then in 2020, while Buhari was still in power, the value of Banana Island rose up to 800,000 naira per square meter. And what was the exchange rate then? It was 480 naira to $1. Now, when Tinubu took over, President Tinubu took over, so sorry. I'm so sorry if I didn't add president to, I'm sorry. When he took over from power, we saw Banana Island has gone up to 2,900,000 naira, a whooping 2,900,000 naira per square meter. And what is the current exchange rate? 1,700 to $1. So what we've noticed is the cost per square meter has skyrocketed in all the cities, be it Port Harcourt, Abuja, and Lagos. It has, skyrocketed in these major cities in Nigeria. And the exchange rate equally has not equally been fair. It's actually, there's been a skyrocketed increase in, exchange rate, and equally causing the naira to nosedive. So here basically is talking about how, I just want us to appreciate how the cost, major building components in Nigeria has actually, been influenced by the foreign exchange. Yes, cement might be locally produced, but let's remember that the raw materials is locally sourced, but the plant and machineries that are used for manufacturing of cement are actually imported. None of them, not even a single one, is produced or manufactured here in Nigeria. So what does that happen? What then happens is that the cost of replacing this plant and machinery is being passed on to end users that end up buying, this product in order to, like cement, for example, that we're talking about, in order to build. There's no how you not build without cement, obviously, except you're doing fabricated building. Maybe you're using steel or something to build. You must use cement if you're doing brick and mortar. And we've seen if you look at the chart here, you see that the price of cement has increased from 2019. We're looking at a 5-year trend here. From 2019 to 2024, price of cement has gone up from 3,500 to 8,200 in the space of 5 years. And that brings us to the price of steel. There is no how you build without adding steel for reinforcements. And the price of steel per ton has equally gone up from 700,000 naira per ton to about 950,000 naira per ton. In fact, at some point, it went up to 1,200,000 per ton. But right now, it's stable. It's becoming stable right now. It's about 950,000 per ton. Then it brings us to granite, even though granite is locally sourced, but we are seeing like a trend in increase in cost, because the truth is that at the end of the day, those plant and machinery is used for either excavating this granite. They are all, imported. Talk about the heavy equipment, your tractors, your forklifts, whatever, your crushers that are used to, produce granite. These things, they are all imported. So this actually plays a major role in in the end to the price of this component or building component. And then we go to sand and blocks and all that. You get the slide, and then you can actually take your time to see what has happened over the years or in the space of 5 years. Now let's look at the impact of Forex on property investments. What it has actually negatively impacted in the foreign direct investments. You see that a lot of foreign investors actually shying away from investing in real estate in Nigeria because of the weakening naira. And because even if they are trying to repatriate their money back to their country, it becomes a problem, because by the time they change naira from naira to dollar or to pounds or euros, you see that the value has actually, gone down. Even though they are getting massive return in naira, they will be getting a very, very minimal return when it's being converted to their currencies. So it becomes a problem for foreign direct investments or foreign direct investors to invest. So local investment constraints too. Local property developers face rising costs due to foreign exchange fluctuation and increased borrowing rates. Increased borrowing rate is actually massively squeezing their profit margin and thereby putting a whole lot of constraint on development, slowing down projects and causing a lot of cancellation of projects and all that, causing even project abandonments. So financing challenges as well. Borrowing costs in Nigeria have equally surged due to high interest rates from inflation and foreign exchange volatility. Developers with foreign loans face increased repayment costs from naira depreciation, affecting cash flow and hindering new project financing. So when you think about, sometimes when these investors think about, sit back and do like play out scenarios or do scenario strategies, they notice that it might not be actually wise to invest as at now. You see a lot of investors shying away, starting new projects because of the whole volatility of the Forex at this point in time. Now, the next impact that Forex has equally had is, you see delayed project and cancellation. There's been a whole lot of delayed projects. In Nigeria, high cost and erratic cash flow causes delay and abandonment of real estate projects, as developers, they end up halting construction work to avoid losses and this thereby worsening housing availability and increasing housing deficits. Now, the next factor that has actually been, or next, next impact foreign exchange has actually had in property investments is equally the shift towards high-end projects. A lot of investors now, a lot of developers are now shying away from affordable housing to high-end projects where they will make maximum profits, thereby neglecting middle-income earners and worsening inequality and inflating prices of luxury property values. So I know this part is where a lot of people listening, I know that this is the part that you are much interested in, is how you can actually mitigate, or strategies to mitigate what is happening currently with FX, the fluctuation in FX. And one of the strategies to mitigate this is hedging against FX risks. Developers can mitigate currency depreciation by securing foreign denominated loans for large projects, particularly, please listen, particularly when this rental, when this your return on investment is in a foreign currency, when your return on investment, if you're into rental properties or you're building to sell, if your return on investment is not in foreign exchange, please, it's not advisable to take foreign loans at this point in time. So these are for people that are actually developing for high ends, and they are looking at return on investment in, say, in USD or in pounds. So FX-linked rental payments, landlords and developers of prime properties in high demand areas can use foreign currency to, denominated lease to safeguard revenues from Naira depreciation. So it's basically, here I'm basically encouraging property developers to look at, I know at the end of the day, you might actually be neglecting affordable housing, but here you're still in business to make profit. You might have to start tilting towards looking at building to rental properties, high-end rental properties where you can earn in USD. But there are risks associated with these investments that you should have at the back of your mind. However, it's a strategy that you can actually adopt to actually cushion the effect of the fluctuation that is currently happening. Then local sourcing of materials, this is another way to mitigate the risk. Property developers can look at sourcing of, construction materials locally instead of having to import. If you look within, really, there are actually several materials that are being imported that are actually produced locally. So we can actually, as property developers, you can begin to look at, property, or you can begin to look at building materials that you can source locally in order to cushion the effect of forex fluctuation. Then diversification of investment portfolio. Investors can reduce risks by diversifying investment portfolio. This could be within various investment, classes, or within, geographical regions. You can decide to invest, instead of investing just in Nigeria, you can decide to begin to look at other geographical regions to invest in that will bring you maximum return, instead of just focusing on Nigeria, where you know that the forex is not stable. Then building strategic partnership. This is for developers. You can actually build strategic partnership in the sense of partnering with, foreign investors by way of, joint venture. That way you're getting forex to do your developments, and you're sure of your returns, you're sure of making maximum returns rather. And again, now bring us to collaboration with foreign partners. This equally can, help cushion the effect. So let's move along quickly. Okay, we're already in the conclusion part and forecast. So looking ahead, volatility in Nigerian foreign exchange market is expected to persist. So you just have to brace up. It's going to persist. And it's actually influenced by oil prices, inflation, global economic trend. And this may lead to, for us to continue to see property values to rise in Naira, in terms of Naira, but stagnate and even decline in So despite these challenges, please do not lose hope. There is still opportunities, particularly in affordable housing and sustainable development. So by staying informed and adapting to foreign exchange fluctuation, investors and development can position themselves to take advantage of these shifts in the market. So in conclusion, foreign exchange fluctuation are crucial factors to be considered for every real estate stakeholder. Understanding the trends and taking proactive measures can actually help you, mitigate or navigate this volatility and seize new opportunities in the ever-evolving real estate market. So thank you, everyone, and thank you for your rapt attention. This brings us.
Wow. Oh, yeah, thank you so very much. I was just glued to while we were just reading, well, let me start by saying a very big thank you to you. I mean, a very big thank you. Because honestly, and I'm honest about this, looking at this data, I definitely know a lot has gone into this data and to get this out. Thank you so very much. And yes, we're going to be having, so for everyone who are listening, thank you so very much for listening. And so please, should you have questions, please do not hesitate to put your question in the question and answer box. We're going to come answer your questions. And also, I know on this platform, there's some real, just like Onye, who is a data-driven analytics, and where I know I can see a few persons who are also into analytics and all that. It's quite interesting to see that all of you guys are here, and some other giants in the industry too. So please, if you are interested in, making one or two contributions, please just do that by showing or raising up your hands. We're going to call you and going to promote you and allow you to, in 1 or 2 minutes, make your comments, make your contributions, to what Onye had actually spoken to us. Onye, thank you so very much. So let's have 1 or 2 talking points around this conversation. When you were wrapping up, let me start from where you were wrapping up. Onye said to us, says, hey, don't lose hope and don't lose hope. And so I was just thinking in my head, Onye, after listening to all these things, you're saying don't lose hope. Well, that's the right word to say, and it is the right word to say. And while you're saying that, I just put that vis-a-vis because I recall also while you are speaking, you talked about housing needs. All of this problem is we're not going to be able to close the gap of housing needs. And I know before now, what we used to discuss before now, if you go to any real estate circle, one of the things we usually discuss is to say, for us to close the housing gap, there's a need for a review of the Land Use Act, that will help us to close the housing gap. But I think now we have a two-headed or maybe another dimension to it. We have the Land Use. In fact, now we have to even put the Land Use Act aside, because even if the Land Use Act is being reviewed now, the question is going to be the possibility or the accessibility of having the funds going into construction. So I can see that it's a whole lot of, but like you rightly said, we should not lose hope. As investors, this is what we should be doing, advising people, telling them, how be it if you're going to invest, you must understand these basic things before that you can also, talked about, I was also very intrigued by when you read out those data about the prices of cement. You took it from 5-year trend. We looked at all of those figures, and I'm honestly, it's alarming. It's alarming, especially when you are also talking about the cost of properties. You talked about, you single-handedly picked Banana Island, and I was looking at that trajectory. You talked about in 2000 and what it was at a particular point in that. In fact, now it's so hard to believe that at some points, Banana Island used to be 400,000 per square meter, and now you're talking about 2-point-something million. That's really, really, that's something else. Okay, so now I want to bring you to, this is my first question. And of course, you have spoken about it, and I want you to also shed a bit of more light or your thoughts about it. You talked about the fact that there's one point you mentioned, which I want us to go back to, and that's the issue of local. You talked about most of the materials that we use for constructions are imported, most of those things we import them in. Now, this now goes to the question, if we're going to solve this matter, don't you think our habits, our appetite for foreign consumption has to significantly drop? I'm just thinking, I'm just thinking really, because does this mean, because from what you've said now, I've heard people also say local materials are even more expensive than importing in some instances. I don't know. I mean, you are more based on this data that you have reeled out. So I just want to ask, and I want you to lend your voice. How do we balance this issue of importing foreign materials for our construction vis-a-vis the need for us to stay local if we want things to be done properly? I'm sure you get me. So what do you want to say about the need for our habits or our appetites? And I'm sure this is not only to local materials. I mean, you want to buy maybe even the tire you're using. Hey, you want to import it. You want to buy you want to buy the air extension. It's imported. The damn thing is basically imported. So what's your view on this? And what do you think we need to be doing? Because honestly, what you have reeled out to us, we must be sincere to ourselves. These are real, these are scary, and like you said, we should not lose hope. But honestly, if we're not going to lose hope, we must begin to probably speak some senses to ourselves, just like you rightly did. So what's your take on this? And while Onye is answering that question, while she's making comment with regard to my comment, I'm still going to come with one or two comments. Then please, if you have questions, if you want to make comments, please raise your hands. We're going to call you and allow you to speak. Onye, please, can you speak to that?
Okay, thank you for that question. The truth is, yes, like you said, like you rightly said, our appetite for foreign goods is massive. But the truth is that with the whole change in fluctuation in Forex, I think even if we, as individuals, we have to start talking to ourselves. We really have to start talking to ourselves, because at some point, you end up running into debt if you do not find a way to cushion your appetite for foreign goods, because these things are on the rise. Let's typically take an example. Let's even leave real estate now. Let's take an example of our everyday use. What can I use as an example right now? I'm looking for like a commodity that is an everyday use. Like rice. Thank you. Like rice. You see how rice has skyrocketed in the space of 1 year. And some people are still, saying if it's not foreign rice, it's no rice.
Oh, goodness.
We should begin to start looking within. The truth is that we can actually, if the government would actually invest in local manufacturers, the truth is, even these foreign manufacturers would not be able to match us, because we have the technical know-how and the skills to actually drive this whole products that we import. A lot of them, go to Aba, see what is happening in Aba. See what is happening in the fashion industry in Aba. It shows you that if these local investors are encouraged by the government, we can actually take over the world. So we have to actually speak to ourselves and actually reduce our appetite for foreign goods and start to embrace our own, because that is the way forward. That's the way forward, going forward.
Okay, thank you very much, Onye. I mean, I think we agree on that, and like you said, rightly. And the other thing I want to go into, I mean, from the slide, there's something you mentioned. 1 minute, I'm trying to look at it. Okay, good. You also did mention it in terms of you talked about the cost of financing. There are 3-dimension key areas that you looked at when you were making this presentation. You talked about cost of construction, which we've actually spoken about now. You talked about valuation of property. I know I can see Chief Ophelia on this call. Chief Ophelia, I think I can see you on this call. And I know this is something you're also very passionate about. And then cost of financing. So let's talk about cost of financing. Then we will talk about valuation briefly. Then we'll now take the question. I can see a few questions already. Like I said, if you want to make comment, please feel free. We're going to allow you to make 1 or 2 comments so that we'll all get to make contribution to this robust conversation that we're having around fluctuations. So now, Onye, you talked about the cost of finance, and I think one of the other things you mentioned earlier on is you talked about the MPR, you talked about the inflation rate. It was all there in your data that you made and you spoke to really well to. and you wrap up by also talking about that this may not be the right time, to be going for loans. So I want to ask, in your opinion, this may be tough anyway, because the truth is, hey, in terms of real estate investment, long-term loans are not really granted. And well, how do you? So I just want to really ask, aside from this, in terms of cost of financing, because hey, like you told us, we must not lose hope. And the truth is, we must continue investing in this real estate sector. Number one, either to close the housing gap, housing need, or number two, even as a means of investment yourself, because you can't keep your money in the bank just that way, but your money is not enough, after all, to probably complete a building project and all that. What else will you be saying to us if we're not going to, in terms of alternative source of financing? What do you think in terms of alternative source of financing? Maybe on here I'll come and meet you and say, see, I need you to borrow me some money. That's just by the way. But I mean, that's just by the way, really. But again, what do you think in terms of alternative financing approach that investors could be looking at?
So yeah, there are actually a lot of alternative source of financing. I know a whole lot of real estate developers are already taking this approach because the commercial banks are becoming very expensive. So there are alternatives available. There's so many of them available, and especially in the global spectrum, and one of them is, instead of having to, like I said during my presentation, instead of having to, take Naira denominated loans, investors or property developers could actually go for dollar denominated loans, which would actually have a way to cushion the effects of, Forex at the long run. But I had to add a caveat there. But make sure that your returns is in Forex and not in Naira. Because if it's in Naira, you'll be losing money. Because you're repaying, remember, you're repaying this loan. These loans, you're repaying them in Forex. And you have to source for Forex to repay these loans. So if you're tilting towards, going for Naira dollar denominated or foreign exchange denominated approach, you should always make sure that that your investment is secured. So that is one way. There's several other approaches. The non-orthodox approach of going to go and meet you, for instance. I said, borrow me money. Money. I want to build, Yeah, you can. But the truth is that to be able to, real estate is capital intensive. And there is no way you can do it without borrowing money. That's the truth. Except you have foreign investors or foreign partners that are actually bankrolling you. There is no way you can actually do real estate. If you're into real estate development, there is no way you can actually do it effectively without actually borrowing. That's the truth.
Okay, thank you, Ian. I know somebody is going to come. People always, they will come at it. I remember when Biodo also made them. I think when Biodo spoke about facility, so a question like this was raised. Somebody is also raising that question. And I'm sure we'll come back to that later. I can say a question that has to do with this rent in dollars. We'll talk about that shortly. But let me come. I can see there's a hand raised for Mr. Solomon. We're going to come back to you. Give me a couple. Okay, I can see two persons already raising their hand. Please don't worry. Please, from the back end, please can you, Chopper, please can you move those people? Please let them be muted. Move them to the panelists. I'm going to call you to make your comment. I can see two hands already raised. So we're going to, yes, just keep muted, Mr. Solomon and Mr. Kano. Solomon, it's good to see you. And don't worry, I'm going to call you to speak. Now, let me come to my last aspect of the discussion point based on your discussion. Now, the other thing you talked about, the third thing was the valuation of property, FS in property. Now, this is our industry. This is what we do. In recent time, we've seen quite a lot of people to say a lot of valuations are coming up. People, unlike what you used to have before, you have to wait for 2 years for you to revalue your assets. You have to wait, 3 years to revalue your assets and all that. But now we've seen people in space of 6 months, in space of 2 months, people are actually revaluing their assets. So the question I want to say is, Onyinye, what approach would you have in the light of you talking? Of course, I know in school we are being told that your methodology of evaluation will depend on the purpose of your evaluation, actually, right? The purpose of evaluation will determine the methodology you're actually using for the evaluation. Yes, but in the light of what you have actually spoken about, to say cost of materials, cost of this and all of that, vis-a-vis the fact that the return of investment, you also talked about people exiting their investment. Yes, you may invest, but the return, and that's why you advocated to say, okay, and I know your advocation is not to say you bill in dollars, but you must look at the component to say the rates. And because, like I said, somebody had already asked that question earlier on. How do you, in doing our valuations, or how will you be speaking to valuation surveyors? About people who had actually spoken to me, when you do valuation, they say you are crazy. The next thing they tell you that something is wrong with you. You speak with clients and they are really angry and mad at you that, are you in this country? Do you really know what you're doing? So what will you be speaking? What will you be telling valuation surveyors or real estate practitioner with regards to understanding of this excess vis-a-vis the valuation that we do on a daily basis?
So we are in a very volatile situation currently. I'm not a stranger to what you're saying. Because you see, there are so many cases like that where you do valuation, and in the next 2 months, you're being called upon to revalue that same, especially when you're doing valuation of plant and machinery or specialized assets. You're being called upon to revalue because of what is happening in the FX, and you will not blame them. We're in a very volatile situation that uncommon things that usually were not taught in school, they're actually happening now. You have to be able to go back and relearn to be able to deal with the current situations. That's the truth. Because they are not, what is happening now, you have cases of, usually before now, like you said, it takes, revaluation is called up after a year or 2. But right now you have cases of 2 months, 6 months, you're being called up to do an evaluation. And like I said, it's not out of place because inflation is happening. That is what is happening. Inflation is happening. And then that is where you have to apply data insights to actually know how to manage or mitigate this situation. Because if you just look at it from a layman's surface or from just theoretical point of view, you say, it's not been 1 year. So why would you want to revalue your property? But the truth is that if you look at trends, you actually see there is need to revalue that property after 2 months because of what has happened in FX. Because at the end of the day, most of, like, for example, this specialized assets, they are imported. And what has happened in FX is that it just keeps jumping. And even the cost of construction for people that are still constructing, you see what is happening. The cost of construction as at 2023 is not the same cost of construction as at today because of inflation. So you will not blame someone that calls you again to say, come and revalue my property, especially when that property is either industrial or commercial property. For residential property, I still have reservations, except if those residential properties are in prime neighborhoods like Ikoyi and the rest of them, Asokoro, Maitama, and the rest of them like that. But if they are in local neighborhoods, you notice they're really not much of a difference. But properties, commercial properties, industrial properties, the truth is that we are in a very volatile situation right now. And so when you're called upon to do valuation, sit back and don't argue with your client and try to justify why they don't need valuation. Sit back and look at trends and see how to apply your professionalism to be able to, come up with a suitable value asset today.
Okay, so thank you, Onye. Please stop there on the background. I need you to, Chief Ophili is there. Please, can you put Chief Ophili as panelist? Just put him there. He's going to make one or two comments. I mean, he's going to make one or two comments with regards to, in terms of Onye spoke wonderfully well about plant and machinery valuation. So I'm going to get you to say one or two things. So let's take Mr. Solomon Onyibe. Please, can you unmute yourself and ask your question or make your comment? Chokwe, please get Chief Kelvin Ophili, bring him to the panel so it takes make one or two comments and so Mr. Solomon Onyibe, can we have your name and make your comments? Thank you.
Okay, thank you so much. My name is, as you've said, my name is Solomon Onyibe, Majesty Surveyor and Valuer. Okay, Onyechi, thank you for the great presentation. I really appreciated it. Thank God I'm part of the listeners today. I've been highly updated with the data that you have provided. And also, I say thank you to Bossy LF for this platform and making out time out of the busy schedules to allow some of your people to gather and present what we are enjoying in the profession. Okay, I was just doing a simple analysis of the data that she presented. Today we are saying that Banana Island is about 2.9 million naira per square meter, and sometime in 2014 it's about 400,000 per square meter. Some people may be looking at it that, look, this is quite high or something like that, but in the real term, I did a simple analysis and I saw that as at that time we have 400,000 naira per square meter. The dollar rate, as she has presented, is 160 naira to the dollar. Why today, 2.9 million naira, we are having 1,700 naira to the dollar. So in real time, actually, in 2014, Banana Island was going for 2,500 per square meter. While right now is going for 1,705 naira 88 kobo per square meter, based on the data that has been presented. So you can see in real time, somebody coming from abroad that is, she was talking about foreign direct investment. Our current economy does not, what we're experiencing currently does not actually support it. I give another instance again. I had a client some time back that bought a property in Lekki, specifically on Oladimeji Alo, a terrace, 3-bedroom terrace duplex. He bought it for, and then the developer was selling it at 80 million naira. And then he bought it in dollars. By then, it was 100 naira to the dollar. So he bought it at $800,000. Some years back, just about 2 years back also, he was asking me how much can he get in the market. And I said, you will get about, say 200, to max about 250. And by the time we did the analysis, the money that, if you want to get it in real time, if you want to get his $800,000 back, by then we should be talking about something in the region of between 650 and 700 million naira for the unit. As we're talking today, that 3-bedroom terrace, based on the amount he bought it, is going for over 1 billion naira, about 1.2 billion plus. So we can see that in real time, the Nigerian property market, the return on investment is not going up, it's going down, much as it's going out of reach. I really agree with what she said concerning the issue of dollarization of our pricing. But then many sectors, which you also pointed out, will not be able to cope with it, except places like Ikoyi and via maybe Asokoro that she mentioned. Other sectors may not be able to cope with it. Some people may be talking about the issue of legality of dollars. You can say you dollarize it, but when you want to pay, you convert it back to naira, and then you pay in naira. You understand me? So with that, you are not really violating any of our laws, provided that you are willing to take your equivalent in naira. So the real thing we're talking about is how much will it cost? So my point here is that we, just like Onyechi has said, we are in a very precarious situation. It's not helping any of us. Wherever we are having this fund leakage that is killing our economy, it needs to be dealt with. It's not about looking for how to meet up. This can be done in the short time to meet up with, to see how we can keep the thing going, keep raising prices and all of those things. But very soon, nobody will be able to afford it. And even no matter what, you can't really get the real value based on the simple analysis that I've just done now with the data that she has presented. Your value is not going up in real time, rather it is going down. So I think we should look at the leakages. The government should also come up with, very strong financial discipline, in their policies. And those things can help us so that we can have a stable economy. And then we can have real value at the end of the day. Because right now, the value is not going up, it's going down. Thank you.
Thank you so very much, Mr. Solomon. Thank you very much. Thank you very much. We appreciate that. And thank you so very much, greatly. Before I call on my Oga Additional Adeleke, Mr. Kelvin, I've dragged you, Chief Kelvin, I've dragged you here. Chief Kelvin, please, can you unmute yourself? So let's speak to the valuation now. Onyedi talked about, is Chief Kelvin there? Please, can you unmute yourself? Chief Kelvin, you are still muted. Okay. I think Chief Kelvin, I don't know if he's listening. I would have actually wanted him to. Okay, so whilst you're waiting for them, the other person is just Mr. Solomon. Thank you for that contribution. Chief Kelvin is not muting. I probably is doing something. So I wanted him to weigh in on what Onye said in terms of valuation. Quite interesting. Onye, I mean, what Mr. Solomon just said, just answer one of the questions, because there's a question here. So let's quickly go into it. Background, please. I think you promoted some people that you should not promote. I think there's no question from that end. Okay, so let's look at the question this person raised, Onye. This person raised, I think it's Mr. I don't know, I'm sorry, Madam Mr. Uzo Carl Ibe said, Onye, based on your strategy on collecting rent in dollars, is it not illegal to collect rent in dollars based on the CBN directive? I think Mr. Solomon just said something about that. But I think, yes, you can probably, if you want to weigh in, Mr. Solomon actually said quite a lot about it. If you want to say one or two things about it, do you want to?
Well, yes, it might be illegal, being that we do not earn in dollars. Why? It's actually still in dispute. But then again, we are in a very volatile situation. And just like Mr. Solomon said, you can actually, dollarize this rent. However, as you're dollarizing it, you collect the equivalent in Naira and convert back your money to dollars.
Yeah.
But what does that do? That actually still puts a strain in Naira. So yes, it's illegal, but we're in a very, very, very volatile situation. Yeah.
Okay, thank you. I think the bottom line, just like you said, is the fact that bring it back to the Naira, it's Naira base, because you cannot be, it's tough to say you invest your money in dollar and you just, you just spoke very well about return. So let's look at other question. I don't know if Mr. Kevin is available. If not, fine. No problem. Maybe he's probably visiting something else. I actually wanted him to weigh in on the plants and machinery value. So let's look at a few questions here. We have quite a lot of them, but I'm sure, Onye, let's start with this. This one says, this is from, I think you have actually spoken about it, but I'll read it. It says, in the face of all these challenges, what opportunities are available for the real estate investors? Abiodun Yoniga is asking this question. What opportunities? Because like I said earlier on, the dollar, Onye is not going to borrow me money to do my investment now. So what other thing do I do now? What other things are available?
Sorry. So there are other various investment opportunities, which is one of them is, instead of just building high rise, and you can go into affordable housing. There is high demand for affordable housing. For the middle income earners, there is high demand. One can decide to go into that as a property investor. And one can equally decide to, if you have the capacity and you have the money, you can still decide to go for high-end properties in places like Ikoyi, Banana Island, that are still very, very resilient even in current today, the demand is still very high. So you can still go into that and be sure of getting maximum return. You know.
Okay, thank you, Onyinye. Okay, I'm listening. Do you want to say something?
Yeah, I just, you know, yeah, basically, let's not overflog it there.
Okay.
Still,
all right, so let's go to the Irene Okeke is asking, what are the opportunities for the real estate professionals in the current FX fluctuation in Nigeria? I mean, now he's talking about the real estate professionals now. What are the opportunities for the real estate professionals in the current FX fluctuation? You've spoke about the fluctuations and all that. Then what are the opportunities there are for us as professionals? Are there any?
well, there is opportunity of valuation services. There's actually increase in valuation services currently. That you won't make mention of, because a lot of people want their property revalued to actually cushion the effect of, you know, FX on their investments. And equally, advisory services on FX. That's an opportunity for real estate professionals. There's advisory services. You can profile your advisory services and earn a fee for it. You know, because you actually have a more standing point to profile those services than someone else that do not have your background or do not have your experience. You know, equally, there are opportunities like as real estate professionals could equally cut across. Real estate professionals could equally cut across real estate developers. So you could equally consider going into sustainable or green buildings, which equally has high demand currently and, you know, has high return on investment. So there are several opportunities like that.
Thank you, Onyinye. I mean, basically, that means that if as a professional now, it's not all about the 5% or 10%, right? So you should be speaking to your clients. I mean, you've done valuation for your clients. This is the time to be telling them, hey, I mean, you need to begin to revalue your assets to bring out the true nature or the true picture of what your assets are. Thank you very much, Onyinye. And so let's go to the other questions. This anonymous attendee is saying, thanks for the wonderful presentation, ma'am. My question is, as a realtor, people or clients seems not to appreciate the services we render. It now says, does FX fluctuations influence our service in terms of pricing? Did you get that, Onyinye? I'll read again. It said, thanks for the wonderful presentation, ma'am. My question is, as a realtor, people or clients seem not to appreciate the services we render. Does FX fluctuation influences our services in terms of pricing?
Unfortunately, FX fluctuation influences your pricing. So if you're listed implementing it, you're on a long thing, I'm sorry to say.
Yeah, so in fact, you should pay us for this. All right, that's just by the way. Thank you. Let's go to other questions. Rashid Ajibade is asking. Rashid Ajibade is saying, I'm a little bit confused. Are you looking at the effect of FS on the cost of construction or on the property value? Because cost and value are two different components, or better still, the topic, okay, I mean, you want to change that topic for us. I mean, I'm sure you understand, or the topic's supposed to be effect of FS on real estate investment. Thanks. I mean, you remember, okay, when do you want to speak to that? Because I wanted to make a comment earlier on. He says, I'm a bit confused. Are you looking at the effect on FS on cost of construction or on the property value?
Okay, sorry, I didn't get the name again. If Mr. Rashid actually followed the presentation, he would notice that I went through the process of trying to give a background before I talked about his relationship with property values. I gave a background, and you cannot talk about cost of property value without actually talking about cost of construction. because in one way or the other, it actually influences property value. Because if you're only practicing, so I don't know the kind of real estate you're practicing, but if you're only practicing a real estate that has to do with maybe residential real estate, yes, it might not necessarily have major impact on property value. But when you're talking about commercial real estate or industrial real estate, cost of construction has a major impact on property value.
Very true.
So aside from your location and other factors, cost of construction has a major impact. Yes, there is difference between cost and value, but there is a thin line between cost and value.
Very true. All right, thank you. Yeah, I think that's up. I was also going to add that was it. I was also going to add that, see, the issue of this, even now, even these values that we're talking about, see, things are changing very fast, rapidly. I'm sure a lot of tenants are getting letters of, ordinarily, when you should take you 2 or a number of years, depending on what you have in your agreement, I don't know, to review. You see landlord coming up, even you as a surveyor. Yeah, because the cost, you can't possibly take up the cost, actually. Even landlords are beginning to ask for rental review as against what they planned initially. So indirectly, whichever way you look at it, I totally agree. I know you had actually spoken in terms of maybe what we look, most of the time, we're always thinking that, yes, because of values, the impact on rent may not be that significant or immediately on property values. But hey, honestly, things are not the way they used to be. Things are actually changing significantly and drastically. Thank you, Mr. Rashid, for that question. Okay, so this Fome Banjoko is asking, based on your analysis, what should be the average percentage increase in price of a property built at the end of 2023 now? He wants you to give that as what is the percentage increase? Onye, do you want to say anything about that? This is actually putting you directly on the spot. Percentage decrease. I'm sure okay.
Yeah.
Let me hear it.
Well, percentage increase. The percentage, I can't actually give you a specific percentage increase.
Exactly.
Because there are several factors that actually influence value, of which location is a major factor. So if you're saying percentage increase in property value of, you mentioned 2023, property built in 2023, I can't give you that data because I need to analyze what has happened within that locality, within the space of time to be able to give you that data, basically.
Thank you. So we have two other, Mr. Arinze, can you unmute yourself and make your comment quickly? In 1 minute, Mr. Arinze, okay. Can you make your comments? Can you unmute yourself and make your comment quickly in 1 minute?
Okay, thank you very much, ESV for this great presentation. Okay, I would like to make a contribution. Talking about financing for.
Ooh, we lost you. Please, can you come back? What happened to your line? Chopper, please find a way of bringing him back while we're expecting him. Joel, Mary, can you unmute yourself and make your comment? Mr. Okeke, we're still expecting you. I don't know what happened, but we'll be glad to have your comments and contribution. Please talk in the background. Make sure you look for him and bring him back. Joel, Mary, please, are you unmuting yourself and asking a question or making a comment? Joel, Mary? Okay, so there's MC Rich Consulting. Please unmute yourself and make your comment.
Yeah, good afternoon.
Good afternoon, thank you.
Yes, my name is Michael Olayinka. I really appreciate this training. Due to what is happening in Nigeria, what I really want to discuss with you is not really a question, it's a kind of contribution. Today, I see two people that really, I see someone that really causing a lot of challenges for real estate services in Nigeria. I will say it's a CBA governor, because what this man is doing every day, increasing the interest rate every time, is affecting our systems, is affecting our services. I got something this morning. I said that he said this at the New York, I think yesterday. He said that Nigeria reserve is raised to $14.2 billion in October. This by CBN government. I'm a little confused now, because if we have such amount of money in our reserve, why dollar is rising every day? Like what? So sorry for talking about government, but because these are the people that determine what will happen in the industry. If I say that they should resolve two people that I want them to really, if they want this our economy to really grow, I would say they should remove the CBN governor and the minister of finance. But to me, they don't understand this system, because actually, I'm an accountant. I'm an accountant. I got to real estate, and I'm really interested in it. And the area that I'm working on is online services. Online are giving more results. Online are giving me results, both Abuja and Lagos. But my comment is that, to me, maybe I don't know, you are a big brand in Nigeria. To me, I think maybe you should try to also advise some of the owner. For instance, I've been seeing two property in Banana Island. Say why building. One is the properties that's on 400 square meter. This owner want to sell this property like 2 years ago now, $3 million. The other one is going for there are 2 units, is going for $5 million. And I discovered that this owner, they are losing money. Why? Because I don't think they are giving this property a good price. They will get their money. They will get more return on investment. But this property is there. Nobody's buying it. Nobody's buying it. I think maybe what I can say, this company, I follow them. In fact, as a matter of fact, we even try to market some of your service. It may be a situation you can advise them. The way though, the dollar is going up every day, but the way the real estate industry work is different. That's my comment.
Thank you very much, Mr. Michael. Unfortunately, everybody's entitled to their opinion. I understand, and it's quite alarming when quite understandable. When you want to say one or two things about that, but hey, government policies will always remain government policies, and we can only try to analyze it based on the things that are available to us. And the truth is, just like you said, true. This is one of the ways that we also contribute to those conversations, discussing this, and we have real estate reports that we write, and the essence is for the government to basically, this is the effort that we all need to make. Please, thank you very much, Mr. Michael. Your comment is well noted. Onye, do you want to say something about it? Please, can you mute yourself now? Please stop. Can you now? I think there's a comment from that feedback from that, Mr. Michael. Yes, good. Mr. Arinsde, I really want to hear your comments. You came in briefly, but you've gone out again. I wish you can come in. But Onye, do you want to say one or two things about what Mr. Michael just mentioned? And Mr. Joel Mary, if you are available, please unmute yourself. We don't have too much of time. I want you to unmute yourself and make your comment. If not, we'll probably just quickly take the other questions. Mr. Kelvin is not obviously available on the call. But okay, Mr. Joel, I can see you unmute yourself. You want to say one or two things?
Yes, good afternoon, everyone.
Oh, good. Sorry, madam. Good afternoon.
Yes, sir. Though is a question I have.
Okay.
So can I ask you, Ashu? Because
go ahead. You can ask question. You can ask. Go ahead and ask.
Right. Okay. Though I joined the meeting late, but I met where she talked about alternative source of financing, and she made mention of dollar-denominated loan approach. So you said the return should be in dollar. Do you think that's obtainable here in Nigeria presently, where Naira is our denomination? Do you think it's not everybody that have access to dollar? So how do you think people, like the demand for that property will be high? Do you think it will be high because dollar is not our denomination? So how are you going to get return on such investments?
Thank you very much, Joel Mary. Thank you very much. Oye, alternative source of financing.
Okay, so I see a whole lot of people have issues with this dollarizing rent and returns. Well, the truth is that it's not new. People are already implementing it and it's working. It's working in high-end properties, actually. Yes, the traffic for those properties might not be as high, but the truth is that they eventually sell. And sometimes they're actually very high. Go to Banana Island, you see what is happening there. Yes, there is no money in the economy, but the truth is that people are still buying properties, and they are buying properties in dollars, and people are selling in dollars. So it's already happening. So yes, the demand for it might not be as high as everybody affording it. Obviously, not everybody can afford Banana Island, Maitama, or Sokoro, or Transamadi, all these high brown areas. Not everybody can afford those areas. But that doesn't mean that the demand for such high brown neighborhoods are not there. I'm just saying investors that have the wherewithal to invest in such neighborhood should go ahead and invest because they're sure of their return on capital, which a lot of investors are already doing. As a matter of fact, I have a client that, there was a time he told me that, if you have any property in Ikoyi and its neighborhood, he's a developer that he's looking for joint venture and he's interested. I'm like, okay, no problem, sir. I'll see what I can do. So I had someone that walked up to me, a client actually told me that he has a property that he's looking for a joint venture somewhere in Ogombo. And I told this client, I have somewhere in Ogombo. He said, oh yeah, I told you, I want Ikoyi. Because he already knows the return on investment he's going to get if he builds in such neighborhood. So, yes, so there's still actually demand for this neighborhood. Even it's not as high as other neighborhoods that the demand is actually massive because of, obviously, there are a lot of people that are middle income earners. So not everybody can actually afford those neighborhoods. That doesn't mean that the demand for those neighborhoods are not there.
All right, thank you very much, Onye. So thank you very much, Joan. Because of our time, we need to quickly take additional. I wish Arinze can come up, but fine. If we can't we have about 5 more questions. Let's quickly take those questions. The question is anonymous. They say, what strategies can local property investors adopt to hedge against foreign exchanges? I think Onye had answered something. You have said something. In fact, that's what you just also spoke about now in terms of location. Let's look at this other one. This one is asking, could we see a shift towards dollar-based property transaction? And what would be the implication? This anonymous attendee is asking, with all this that is happening, this FX fluctuation, are we likely going to be seeing a shift towards dollar-based property transaction? And then what could be the implication, Onye?
It's already happening, like I said earlier. It's already happening. We a lot of properties take for instance Eco Atlantic is in dollars. If you're not buying, walk away. They don't care. That's the truth. They don't really care. And a lot of these people, a lot of these investors, even though they want to sell, but they are not in a hurry. They've placed their properties in dollars. If you want to buy, buy. If you don't want to buy, keep working. So yes, it's already happening. And there's nothing we can do about it, unfortunately, as professionals. Yes, we know that it's illegal because we do not earn in dollars. But however, it's a strategy and it's working for some people, it's working for some investors. So why not embrace it if you can? Yes, it's illegal, but the truth is that we're in Nigeria. So sorry to say that, where, yes, as professionals, we promote legality. But however, we're in a very unconventional situation. And we need to come up with strategies to actually survive this situation.
Great, thank you. I love that statement. We're in the unconventional situation. All right, so about 2 more questions. This one is saying, okay, this is just a comment by an anonymous attendee. He said, I wonder how opportunities in housing and sustainable development is possible with low margins. Yes, this is the fallout of what you said. This person is also just, echoing whatever it is their reservations are. with the low margins, when you started the conversation earlier, you talked about even foreign investors, when you invest in Nigeria today, the issue is exiting your investment. By the time you invest money here and you want to take your money back out because of the exchange rate, the margins are, yes, the margins are very low. So it discourages investment. I think this person is just, echoing the frustrations that are in terms of low margins. Okay. All right. 2 more questions. Shegun Falebita. Hello?
I would want to say
okay,
something.
Good.
I would
All
want to apply some pointers to. Yes, if you look at it on the surface level, there might not seem to be a margin. But the truth is that when you look at it holistically, you see that you can actually make a kill if you actually invest in sustainable and green buildings. Because guess what? There are opportunities that the government, incentives that the government have put in place for this sustainable buildings that investors can tap into. That's one. Then who says you can't go into innovative construction where you use prefabricated materials instead of doing the normal brick and mortar, and still achieve sustainable buildings or development and still make a kill. So there are several opportunities. There are several ways you can actually make a kill. And if you look at it on the surface level, you'll be like, oh, you'll be spending more if you're doing sustainable development. But the truth is that most of this the materials or the construction materials used for sustainable development can equally be locally sourced. Who says they can't be locally sourced? They can equally be locally sourced. Say trapping of rainwater. These things can be locally done. So there are several ways to go about this. So let's look at it holistically. Don't look at it from the surface level. Then you understand where I'm coming from. Thank you.
All right. Thank you, Inye. So these 2 more questions will go. This one is from Shegun Falebita. He said, good afternoon, yes, Inye. Thanks so much for the presentation. Now that it is so obvious that property rent has to go up due to forest fluctuations, how then do we balance the equation so that landlord will not overkill prospective tenants with high rents and at the same time make reasonable returns on their investment? Did you get that? Let me read it one more time. Good afternoon, yes, Inye. Thanks so much for the presentation. Now that it is so obvious that property rentals has to go up due to forest fluctuations, how then do we balance the equation so that landlord will not overkill prospective tenants with high rents and at the same time make reasonable returns on their investment? Do we have a say on what the landlord will do?
Unfortunately, sometimes we do not have a say, but the only thing we can do is, as professionals, we have to advise these landlords, because sometimes these people are not they don't have the professional background we have. It's now us to advise them. I don't know why I keep saying advertise, but it's now us to advise them on, this is what to charge. Yes, there's FX rate is going up, but you can't just push everything to your tenants. That's the truth. Your tenants will not carry all your problems.
Again, like you said, and that's why it's also, like you said, you're very right up. The truth is, what is the essence of, pushing those rents, and the tenants are unable to pay. If they pay the first year, what happens to the subsequent years?
Exactly.
So you just have a situation whereby you just have, you resort to legal means. You stay long. You know how the courts are here. You stay long before you even get the tenant out to get somebody else in. So you may want to look at it. Just like when you said, and that's why we are here to give this advisory, so that you're in best position to look at sustainable rental income as against just having an income that is not sustainable, which will lead into a problem, in years to come. The last question here, an anonymous attendee, this one is saying, other opportunity available. This person is also making comment. Other opportunity available is tokenization of real estate. Tokenized real estate can allow investors to buy and sell fractional shares of properties, making traditional liquid markets more dynamic. Tokenized bonds can simplify issuance and management, cutting down intermediaries and transaction costs, thereby streamlining. Oh, thank you very much. This Anonymous is telling us about other available options that are available to us. Thank you. Okay, okay, Mr. Michael had actually spoken earlier on. I can see your comment too. Thank you very much. I think we've quite exhausted a lot of the questions that are here. I wish that we had Mr. Arinze back, but somehow we can't get him up there to make his comment. Oye, thank you so very much for doing this. I mean, honestly, I had to go back to sit and look at all this data again and again. And again, you know, we've moved to, you talked about some of those drivers. You talked about COVID-19. You talked about the election. Yes, you talked about all of those things. And I was just looking at those years, 3 years interval or 4 years interval. And maybe the last question I want to ask you, I'll just put you on the spot. I'll ask you this question. And the question is this the right time to buy? You know, because is this the right time to buy properties? Is it the right time to invest? I know, yes. I mean, would you advise? Because the truth is, I imagine if I had money so many years ago to buy at that rate, maybe someone would have been waiting to say, maybe to come there. So, but a yes or no, is this the right time to buy?
Yeah. You're actually putting me on the spot, like you said.
I am nice. I told you earlier on.
The truth is that because of FX fluctuation,
yes,
you can actually consider diversification of your investment.
Great.
The other investment options available. Just you know, get financial literacy so that you understand other options available to you and diversify your investment. Instead of just focusing on just real estate, you can diversify. And again, you can equally look at, like I said earlier, geographical investments, move to other countries. You can move to other countries and invest in those countries rather than just where you're sure that your investment is secured than investing in a volatile situation like ours. So those are options available. That is not to say that if you want to buy property, you should not buy. I'm not saying that. If you want to buy as a hedge as against inflation, why not buy? However, it's not a criteria that your property value would actually be going up, like I said. But
the return on investment,
in true sense, is actually going down. So you just have to sit back and be able to make a very insightful and reasonable investment decision before you and play out your scenarios. Do like a scenario strategy before you decide on where to invest your money.
Yeah, Hoye, thank you. I want to allow you to divulge everything because they must pay for this information. They must pay because I was going in my head and say, don't say everything, no, don't say everything, no. But again, that's okay. This Yusuf Oladijo is saying kudos to the organization. He's asking if they're going to get presentation. Oh yes, you'll get the presentation. Just drop your email address. I mean, this slide will be forwarded to you, and also the recordings will also be forwarded to you. Just drop your email address. We'll address them at the back end. How much more can we thank you for making this presentation? Thank you for coming forth. And this is the right topic at the right time. And you made the kill of this topic by going deep into it with the data. Data don't lie. Data don't lie. It's the data. They are there for us. And that's what we have done as Boselia & Co. is to analyze this data, to bring them to you as the foremost real estate firm, to begin to tell you that, see, you can do it better. And we are well poised to advise you, to tell you this is what you should do. I mean, that's what I was saying. Should you have any of your investors who are interested in real estate, hey, we're here, we can advise you. I mean, we advise you, we tell you what to do. And you can be sure that when you get this advice, in the next couple of years, in the next couple of months, you'll look back and say, oh, yes, I was glad I listened to the firm of Boselia & Co. Oye, thank you so very much. Thank you. We'll look forward to calling you at some other time. Yes, I can see a lot of people sending. I can see quite a lot of Oye, there are quite a lot of thank you message that is coming here. Yes, a lot of them, the emails are being sent. Yes, I can see them. Thank you also. Thank you. So in here, we're all in one word, in one accord, say big thank you to you. So at this juncture, I want to thank every listener, those of you who have actually attended this webinar. We'll be having the last edition for the year in November. December, we're not going to be having, so the last edition will be coming in November. You may be willing to ask for all of the slides that have been done in the previous month. We'll gladly share them with you. And it's you can be sure next month is also going to be exciting, just like we had this month exciting. Onye, it's good to have you. Thank you. I'll still come to you for the angel loan. I'll come to you to come and give me, on a lighter note, I'll come back to you. Thank you, Onye. You've done well, and this is well appreciated. So on this note, we want to say for all the people who have attended, those who made comments, those who asked questions, we do not take you for granted. We appreciate your coming and your staying with us and to make all this comment. Thank you, and bye for now. I'm looking forward to see you again in the month of November, when we'll come with another topic that is more interesting for your consumption. Thank you very much. Once again, my name is Olusunjo Faole, and Ubosele & Co. has brought to you this webinar for the month of October. Looking forward to see you again. Bye, and God bless you.